Hey ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back with your daily crypto news and analysis. And today we are going to be talking about Quant Network, aka QNT. And it has been a while since I made a QNT video, and this one is going to be very interesting, as we are going to be talking about capital markets, tokenization, CBDCs, and pretty much everything that is happening around the world right now. We are seeing a very large radical change, and it will blow past a lot of people. Like, this is going to shock a lot of the general public because they are not opening their eyes to what really is happening in front of them. Right now, if you do take the time out to do a little bit of research, understand what is really happening around digital currencies and the financial markets themselves, then you would see the major shift happening. And it's all shifting away from physical to digital. And it's centered out on blockchain technology, DLT. And I think that this is going to be extremely revolutionary, and it's going to be one of the largest innovations that have happened within the last, couple decades. And you can even argue like 100+ years. So as we do look at this, I do center it out on Quant. I believe that Quant, although yes, a lot of people have been focused on price action of QNT, everyone is always focused on short-term price action, and I just don't understand it, especially with a lot of these utility gems like Quant. I don't really care about the price of QNT today or tomorrow. I look at this as a 10-year investment, and I know that that's going to scare a lot of people because they're going to say, well, I have to wait 10 years. No, you don't. But to me, the reason why I'm saying a 10-year investment on Quant is go back to 2013. Look at Bitcoin. Go look at Bitcoin today. You could see the revolutionary difference in value creation. In my opinion, Quant will be bigger than Bitcoin. I've said this many times because as we do look at CBDCs, as we do look at digital currencies, tokenization, etc., everything comes back down to the wire, and that wire is Quant. Quant is the connector, the bridge, the foundation of what's happening. It's very similar to what they are saying over here, like the foundation of the blockchain economy. If you believe in crypto, if you believe that crypto will become a key player around the world of finance, then you believe in what Quant is doing. We do see over here unlocking benefits for all assets of all kinds, from currencies to carbon credits, and being tokenized on blockchain. Financial institutions, enterprises, and their customers are all benefiting from assets whose ownership is immutable, provenance is traceable, and use is easier to manage. Entirely new digital economies are emerging as a result. And this is why we say, like, the Web3 world is going to be much larger than what anyone can anticipate. As we do look at the Web3 world itself, digitization is truly becoming a huge focus from very large companies, brands, etc. Google, Amazon, I mean, you name it, the largest companies out there are going full force Web3. And we see this through names like Hedera. From what we've seen with Hedera in just the last couple, weeks, months, and even years, they have done the unthinkable. They have onboarded massive companies, banks, institutions. I mean, like, this is what I talk about on a daily basis on this channel on what's happening, because I want people to wake up and understand how large of an opportunity we have in front of us. In my opinion, it's going to be much larger than what most people anticipate, and it's all going to be centered out on those enterprises, those institutions. And really, when you look at what's happening around all of this, we do center it back to Quant, because Quant is the one that is connecting all of these blockchains, all of these DLTs to the major players, to the institutions, the enterprise, etc., because they're not going to just, jump in and say, oh, hey, look, we're utilizing XRP today. No, they don't have that ease of use yet. But Quant is allowing that through its API gateway, that 3 lines of code to utilize any DLT of their choosing. Now, also, digital currencies. Obviously, yes, central banks are very bullish on digital currencies. What do you see over here? Digital currencies. Most of the world's central banks are experimenting with digital currencies, while commercial banks are readying complementary products such as tokenized deposits and smart money. Secure, compliant digital currencies that operate at scale. Well-regulated digital currencies, whether at a national or commercial level, can provide significant public benefits by increasing efficiency and reducing costs for both domestic and international payment systems. They could also play a major role in increasing financial inclusion by helping the hundreds of millions of people, especially in developing countries, to connect to the financial system. And they do mention the challenge here, yet without proper foundation, such currencies face serious challenges, particularly in the form of privacy and security standards, compliance, transparency, usability, and performance at scale. Until these challenges are met, widespread adoption of digital currencies is unlikely. And yes, it's going to take some time, but as we do look at what's happening, a lot of this is centered out on tokenization, programmability, and just full-on digitization of the financial system, if you will. You see over here, we enable the simple and flexible implementation of a digital currency, a solution which provides the flexibility to support a wide range of use cases reliably, securely, and at scale necessary for commercial, national, and international implementation. We facilitate central bank digital currency issuance and transactions, tokenized deposits and liabilities, issuance and transactions, programmable money. All of this is happening right in front of us. Like, most people don't understand how large this is. And I know that there's people out there that are going to say, well, the Overledger platform doesn't utilize Quant. It does. The token itself, QNT itself, is crucial to the entire ecosystem. And that's why when we do look at what's happening around Quant, it's a big deal. Like I've always mentioned, that ISO standard that they created. All of this is tying everything together. Like, we are seeing everything being built in real time. And yes, although it does get, frustrating to watch how slow things are starting to move around price action, etc. Things are moving very fast around the technological areas. The fundamentals are here. Regulations are being put in place. Frameworks are being designed, created, and ultimately ushered out in areas like Europe. The UK is ready. The UK wants to become a financial hub. I mean, all of these areas want to become a financial hub around crypto. We've seen it in the UAE, Hong Kong, etc. And the US is not going to sit here and do nothing. I know so far it has done nothing. I do believe that the race is on, and they know how serious this is and how fundamental it is to be a first mover as well. We do see over here, though, from Quant, smart digital currencies have many advantages. Gilbert Verdian made the point on a Future of Finance panel recently that they include disbursements of currency. Listen closely to this video.
If there's a disbursement needed from the central bank for economic stability, for whatever reason, it'll be very easy for the central bank to put £1,000 in everyone's account almost instantly, rather than the current system. It may take a long time to be able to do that. So COVID loans, things like that we saw that had economic impact, can be accelerated very quickly to stabilize the economy.
And also, this is right on par with what he did say over here as well on a Financial Times Live. Will central bank digital currencies finally give banks the tools needed to effectively combat fraud as well? Listen closely.
Consumer perspective, you're going to get a better form of protection with a new form of money, because privacy is going to be intact in the money itself. And that also allows us to protect fraud before it even happens. Because there's, as we've seen, fraud is an exponentially growing problem. The more we throw money at it and the more solutions we throw at it, the bigger it gets. And we've been battling fraud for decades. But in this new form of technology, we can actually build in fraud and protection at the money, at the network level.
And when we look at all of this, this is why CBDCs are going to be in the spotlight. They're going to continue to be in the spotlight. We do see over here, CBDCs in the spotlight at IFGS. This was back in April. When we looked at this, you could see how adamant these banks are on adopting this technology. We do see Innovate Finance's Global Summit took place last week in London, and central bank digital currencies were at the heart of the dialogue. Government ministers, central bankers, and commercial bank representatives all agreed it's now a question of how, not whether to implement CBDCs. They are ready. They want to implement digital currencies. And as we do look at this, we look at the connectors, the technology stacks that are going to help this become a reality. And in my opinion, it is all centered out on, guess what? One thing. We go back to interoperability. Interoperability is crucial. This is also why I say that Quant will be bigger than what anyone can assume, because, we look at some of these valuations of these companies like Apple and, Google, et cetera, and they're in the trillions of dollars, right? And they're not creating any fundamental major valuation. They don't really deserve that valuation, besides the fact that they are creating products for the general public. But when you look at Quant, right, they are creating value and they have a platform that can be utilized and channeled from governments, central bankers, even the retail sector at heart. Like, this is everything. So when we look at Quant, like, to me, I do think that this will achieve $1 trillion plus market cap. But the question is when, right? Like, to me, it's not if, it's a when. And that's why I say, like, in 10 years, like, things could be extremely different. We are seeing how fast things are moving technologically, and it's only a matter of time until price does catch up. I always like to be conservative on price, on time frames with prices. So I would gladly love to see things happen much sooner, but I'm just looking at this and I see how big this is. Like, here we have a quote from the governor of the Bank of England. He left the audience no room for doubt. Radical changes on the horizon for payments. The drivers include the decline of cash, the digitization of everyday life, and ongoing developments within existing payment systems, infrastructure, and regulatory frameworks. The question is not whether, but how we should develop the machinery for tokenized transactions to settle in central bank money. And what's crazy about all of this is, like, I don't think people really realize how large tokenization will be. There was a few things that Quant actually talked about, but I did see a quote from Andrew Carrier. Actually, he quoted this article, and we do see tokenization can be a transformative tool to create a frictionless digital marketplace for asset managers. And what's crazier about all of this is, like, this is talking about the potential of a $3 trillion market in tokenized assets for asset managers to capture. Like, this was $3 trillion. But then when you come over here real quick to, it was this one right here, capital markets. Capital markets, as funds and asset classes they invest in, including equities, fixed income, and alternatives, are tokenized. Issuers are connecting with ever larger pools of liquidity and new investors. Tokenization of the capital markets is one of the, like, an extremely large opportunity for crypto and DLT. And also, as we look at this, like, I do think that this is a future where, you know, we could look at equities being tokenized. We could see this happen within the next 5 to 10 years, or at least it start to trickle in. And if this is such a large opportunity for DLT and crypto technology, and I do think that's only going to grow and grow and grow, like, outside of just what they are focused on. Like, capital markets, to me, is not only a $127 trillion market, but also tokenizing this market and really becoming a key player around these markets is crucial for blockchain. And why do I say that? Well, I think it's because this market is ripe for disruption, and DLT is providing incredible efficiencies for this market. I mean, you can see the challenge here. While permissionless blockchains liberate the capital markets by allowing any party to participate, they also introduce a problem. How can these different blockchain infrastructures be connected, maintaining privacy and compliance without losing the benefits such as speed and anonymity that DLT brings in the first place? Well, if we scroll down here, Quant provides an answer, and not sometime in the future, but now. Our tokenization technology already is being utilized for applications such as tokenization of fund yields, provides full and seamless interoperability at scale between both permission and permissionless blockchains while maintaining privacy and compliance, all without overheads. We facilitate asset tokenization and fractionalization and bond issuance. And again, like, as we really look at this, I do think that people need to realize, like, the valuations of some of these markets. And to me, as we look at these markets as well, tokenizing some of these markets will bleed into every aspect of life. Like, these are some, like I say it daily on this channel. Every single industry and every single sector will be touched by blockchain technology within the next, I would argue, like, again, 5 to 10 years. And that's me being a little conservative, sure, but I just think that DLT is going to be the foundation of a lot of these industries. And it all starts with one thing. Like, listen, it's not going to happen overnight, but regulations is the obstacle. It's the number one obstacle to adoption of tokenization, adoption of DLT, and digitization in full. And once we get regulations put behind us, which it's starting to see, like, that's going to be the case within, I would argue, like, the next 2 years, then things are going to go full force. And again, like, regulations could happen at any moment. I've said it, like, this is something, you know, if we create a framework and it's a harmonized framework then yeah, we could have regulations next week, next month, next year. But this is going to be the pivotal moment for adoption. And once we have that, it's end game. And I do think that players like Quant are going to be vital to the evolution of a lot of these areas of opportunity. Meaning, we'll talk about finance, healthcare, gaming. I mean, you name it. It could be anything. And anything of value as well will be tokenized. I've said that time and time again. The number one interest to me is obviously real estate. I've talked about real estate and why real estate will be tokenized. It makes a lot of sense. These illiquid asset classes are going to demand tokenization because guess what? It makes them liquid. Fractionalization is a huge area of benefit for tokenization as well. And that's why I'm so bullish on Quant, because Quant has incredible solutions. There's so many projects already, being built out on Quant, and the world is about to see a radical shift, a radical change around finance, around payment technology. And look at the backgrounds of some of the team, right? That's working at Quant. Like even the CEO, Gilbert Verdian, he's a massive giant around, the healthcare scene, the financial scene. Like, I really think that a lot of people are missing the point here with Quant. Those that understand it, they understand it. Those that don't understand it, they will soon understand it, because this is going to disrupt everyday life. And the ISO standard, the ISO standard is already here. You could even hear Gilbert Verdian talk about that here in this last clip, and then I will wrap things up.
Yeah, one of the things we did early on was to establish the ISO standard for blockchain. So that was 2015. I led that initiative while in government, in the Australian government at the time. And now there's 57 countries working together on standardizing blockchain as an ISO standard. Since then, there's been a lot of more initiatives in terms of technical interoperability, policy interoperability. I think the industry is working on it. There will be standards, and there already are standards that are being published. But in terms of CBDCs, what we're seeing is mostly going to be private permission chains rather than public, decentralized, permissionless blockchains. So having interoperability in the central bank digital currency context means the interbank network between the central bank and the commercial banks, and how they integrate with each other and how they interoperate with each other, and then linking that to the traditional rails.
And this is exactly how it's going to work, to link to those traditional rails, to have that interoperability between these two worlds that are so different, but ultimately still on par with the same overall vision. I really do think that this is going to be extremely large. Once we see, those obstacles broken, it's end game. And they already have the standardization built in. Gilbert Verdian created the ISO TC 307 standard, which is blockchain and DLT standards. This is so bullish, and I am so excited for the future around Quant. I've said it many times on this channel. And with that being said, I hope that you guys enjoyed this video. If you guys did, definitely leave a like, subscribe, turn notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord down in the description below. Us is up to you all. Have a beautiful day or a beautiful night, wherever you guys are on this. Before this has been Nick. Peace out, guys.